It's worth bearing in mind that the labour market has been in a remarkably tight position for the better part of 8 or 9 months now. It's been hovering around 3.5% unemployment rate. And those that are on individual agreements, their wages can respond a little bit more quickly to those very tight market conditions. But those on RBA'S and in the public sector, it takes a bit more time for that to filter through to those kind of slower wage reset agreements. So that takes time. That's coming through now. There's also a factor at play here that a lot of these agreements are linked to the CPI, and we've had a very brisk, very fast inflation for some time now. So that starts to get baked into RBA'S and is putting upward pressure on the wage rates.
And so this is, we should point out to people, showing you the overall totality of the employed community. But of course, there's also the decision from the Fair Work Commission about the lowest paid and those on award wages, where the government has said it wants inflation, currently 7%. The unions, the ACTU, has said it wants 7%. And the employers are back down in the mid-threes, 3.8%, I think it was, for the Australian Industry Group the other day.
Yeah, I think it's never too surprising to see those parties start at very different starting points for their negotiations. We did see, quite a generous decision from the Fair Work Commission last year, which is, understandable at a point in time where people are facing really strong cost of living pressures. But there is a trade-off there, and it does factor into the costs that businesses are facing and ultimately shows up in inflation. And it's the same juggling act that they'll be faced again this year when they hand down their decision for 1 July. I still think we'll see, an attempt to give people something back to deal with cost of living pressures, but we may not fully match the CPI rate like we did last year.
One of the interesting parts, and this is where the Reserve Bank starts to think about this as well, is where is full employment in Australia? What's quite clear is we're beyond capacity for employment in Australia. We just don't have the people for the jobs that are required right now at 3.5%. Now, is it 4.25%? Is it 4%? Is it 4.5%? That guessing game also determines where the Reserve Bank is going to move interest rates in the future.
Absolutely. And, after the RBA review, we're going to be having these discussions more frequently because that kind of thinking is going to be enshrined in how they go about things. They'd be the first to point out that, it's hugely uncertain as to exactly where it sits, but I think there's no argument that we are beyond full capacity at the moment. And what we mean when we say that is that, we're at a point with the labour market where it's generating wage growth that's faster than what will generate an inflation rate consistent with the RBA's target. The missing piece in that puzzle, of course, is where productivity growth is, and certainly the RBA's shifted the conversation there a bit more recently. We're going to need the national accounts to have a bit more light shed on that right now, but I do think that today's print will be, uncomfortably high for the RBA and prompt a bit more action from them.